Morning, everyone. Let's get started here. All right. S&P managed to kind of make a bit of a fight back yesterday again, and really continues to manage to kind of outperform even when things start to look ugly. I mean, yesterday again we got down quickly 12 and a half points on the S&P within the first 15 or 20 minutes. What was really interesting about that was that, specifically our local market and a lot of the other emerging markets, Brazil and among others, were continue to be well bid and continue to hold up. I mean, our market closed up yesterday with the FTSE losing about 1.5%, the DAX losing 0.5%, and the S&P at the time of close down about 0.75%. So something that you don't see all that often. I think it's just really important to take cognizance of that, and the fact that we definitely are in a bull market here. It's definitely worth realizing that and just keeping up with it. Sorry. So we're going to pay attention to that going forward and just see how the relative performances, see how the U.S. equity markets continue to outperform or just hold up in light of a lot of negative news like we had yesterday. The Asian stocks were up earlier, but we've had a nice reversal, quite a big reversal to a point out of certain indexes, specifically Japan. Japan was up about 1.5% early in the session. Now we're down about 1.5%. You can see there, Hong Kong and some of the other markets traded well. Australia is up nicely on the back of the Chinese import and export numbers, which was really the real catalyst overnight to get us moving higher. And then the yen is kind of continuing its rally as well, which is really, I think, what's weighing on the yen, on the Japanese Nikkei. So, all right, let's have a look at corporate action out today. We have Northam with its full year trading update. The headline earnings per share that they said to be between 60 and 70% higher. I just want to make sure that you guys understand, the expectations that we're pitting these numbers against are strictly against Bloomberg expectations. They're not against our expectations, and these are consensus numbers. So some people can be generally higher. Generally, it can be a lot higher, it can be a lot lower than what the actual consensus is. And unfortunately, the consensus can be skewed by one or two people that have dramatically high or dramatically low expectations. So, for instance, yesterday, we mentioned that that Old Mutual may have been kind of in line, maybe a little bit soft, and it was actually significantly better than a lot of people had expected. However, like I said, they're not our expectations, just Bloomberg expectations. If we're going off of any expectations that aren't Bloomberg, we'll mention it if it's Standard Bank or if it's someone else. So this morning, for instance, you see there, it's a significant beat on the expected headline earnings per share. I'm not sure if there's a once-off involved in that, but just keep that on your radar and realize that there's corporate action there this morning. We've got M&P this morning that earnings per share at 49 euro cents. It's better than expectations and guidance that were both at 46, and the divvy per share came in, call it a half a cent light. So not too bad there. We have Rio Tinto, which was supposed to be out earlier, but I see it's just crossed a second ago, and it looks like a slight beat on earnings. They're expecting. I think we have a very, very small beat there out of Rio Tinto. I'm not sure what the guidance is going forward, but maybe we can get back to you guys on some of that after. We also have Priceline that's out after hours today in the States. I've also seen on the Bloomberg terminal some things that are coming through at the moment. We have Harmony Gold, which is cut to underweight versus neutral at HSBC, and the Anglo Gold was also cut to underweight versus neutral at HSBC. So lots of gold miners continue to just get thrashed by these by the investment banks. All right, we've got lots of stocks going ex-div today. On Monday. We've got Anglo's at 35 and a half U.S. cents. We've got SA Breweries at 85 and a half U.S. cents, and we've got Kumba paying a 20 Rand div. So yeah, keep that in mind today. There's some big divvies, especially out of SA Breweries and out of Kumba. You may see a couple guys come in and chase those, so just be aware of that. All right. Market data out today. Like I said, we have the current account balance out of Japan, which was slightly less than expected, but the unemployment change out of Australia, which was significantly worse. We could continue to see heavy data out of Australia. The big numbers, of course, were out of China, trade balance numbers, and the import-export numbers, which the import-export numbers just really were an exceptional beat. How reliable these numbers are, who knows, but just an enormous beat there. We have trade balance that was out of Germany earlier that was higher than expected as well. We also have industrial production out of Spain coming at 9, and we've got local manufacturing production at 1 o'clock, and then we've obviously on Thursdays always have initial jobless claims, which is at 2:30 this afternoon. So we'll wait and see what's happening there. I think definitely right now, every time that there's more good news that comes, I think that could potentially put pressure on the market just due to interest rates probably moving higher, and putting a little bit of pressure for the taper to come sooner rather than later. All right, let's jump into the maps. Okay, the first one I want to show is the FTSE. I'm going to show the FTSE here on the year chart, and you can see it's really interesting because you can see how this level is very significant. We pulled back to touch this level, really pushed up nicely off of it, and then the last few sessions really broke down. To me, it's very interesting as well that we broke down on the back of there was monetary policy statements yesterday. Although they were very much expected, I think it was a confirmation of monetary policy that was really bullish for the UK, and they also raised guidance on what they thought the GDP would be going forward, as much as to 3.5% growth next year, which I think is really bullish for them. So I think you have to take even more note of it because of that fact. So we've definitely dropped support here. I'd put support here at 65.38, 65.40, 65.35 to 65.38, somewhere in that region. But whichever way you slice it, we've definitely dropped below support here, and can, I think, definitely move reasonably lower from these levels. So, I really thought markets were gonna show us quite a strong rally this morning, after seeing the way that the S&P is starting to fade now. This reversal that we had in the Nikkei, the bit of the lack of follow through. I'm not so sure right now. I know it's early, but it's starting to look. Not so bullish. I mean, after that sell-off in the UK, you're up 5 points on the FTSE future this morning. It's not amazing. All right, show ABSA for you guys that you love your wicks. We'll draw it out the wicks. Still a breakdown here, and ABSA. I say it's a breakdown. It's kind of right at support, maybe. But either way you look at it, ABSA is either right at support or it's kind of breaking down. I mean, if you take it from the closes, this thing definitely has broken down. So I think a really important session today at ABSA. We dropped this level. I wouldn't be surprised to see ABSA trade down to 130. So watch it closely. Sorry, I should call it Barclays Group now, but. Watch it closely. I think there's some downside to ABSA if it can't get up today. All right, let's look at Sasol. We're going to look at Sasol on a 30-minute chart here. And what I wanted to show is just how we're really flagging into. Let's draw it from the wicks here, just to make it serve our purpose. But you can see there, we're really putting in a beautiful flag on the 30-minute chart to potentially push higher on Sasol. Obviously we've had a good trading statement there. Oil's been the strongest kind of commodity of the year. This thing doesn't have the issues that all the other locals have here, so all the fundamental reasons I think are also there. And if we can get above 470 today or tomorrow, I think we can potentially trade all the way up close to $500. So I think it's a big call, but I really think that potential is there. So watch that so closely if we get above that little flag there. Very similar pattern to an extent is Impalas. You can see there, same sort of thing. We're really flagging really off of this 96 level, which is, you can see the inflection point there, and if I could drag it back here, you can see as well how it lines up there. I don't want to shrink it down too much. You get the general idea. If we break above sort of 98, I also think this thing can come up and at least test new highs, maybe even take those out, which is nice for 5, 6, 7% from here if it was to fulfill that. So watch Impalas above 98. I think you can buy, and then with a stop below 96 is definitely what I think the way you'd want to set that up. All right, let's look at RMH. We're going to look at a little bit longer term here. We'll look at a year chart and just show here how on a closing basis, we'll just draw it right there. You can see here how we've really broken out of the downtrend that had been in place since the beginning of the year. I think that's quite important, and then also we're still holding this little uptrend nicely here. So I think this setup can really project us out reasonably higher. Obviously, market conditions have to allow this. At this point right now, the way the market's trading, it's very. I don't want to try to make calls for big money on any trades, especially long trades at the moment, just strictly because I think the market is very overextended, very overbought. That being said, it's behaving very much in a bull market pattern. So for these things to go higher, I wouldn't be surprised. I just wouldn't be looking for enormous targets at a lot of these stocks. All right, let's look at GFI. You can see here we've really kind of just broken down below support as of yesterday. Let's zoom this forward a touch, and you can see there how if we haven't broken support, then we're right at support. But either way, I think this pattern's looking very ominous, and I think that we can move significantly lower from here. I would put our target here probably, taking out lows down somewhere around 44, 45. So and I think all the gold miners really confirming that. We showed Harmony yesterday, dropping support here at a hair above 33. Which this thing also, like I said, looks ominous. We're talking about a target that's down around 37, and Anglo Gold, which is also broken down below support on a continuation pattern. And I think this thing also, I really believe that this thing can trade down close to 100 Rand. So I think the charts on gold miners are looking very, very ominous at the moment. Just keep that in mind going forward. And the last one I'm going to show is out the States. Good old Bill Gates. We'll look at Microsoft real quick, and just since the last earnings report, quite shocking earnings report, you can see how we've just entered into a really tight range of about call it $1. Okay, that's quite a tight range for this many sessions, especially after such a big earnings miss. You can see there we closed right at resistance, which is call it 32.10. We get above 32.10. Probably not extreme amount of upside if you guys are playing on a shorter term basis. I think this thing can definitely move quickly up to 33 odd. But just want to watch them as we break out of this pattern. Either way, I think we'll have a nice move one way or another. So just keep that in mind. And I think it kind of suits what the market conditions are at the moment, which are very difficult to read and difficult to try to make a longer term call on the market. That's it for today, guys. Thanks a lot.